Today we're talking about short squeezes, and the reason I'm so excited to share this with you today is because we had a perfect example of this week. On Friday, we saw the company GameStop fall victim to a short squeeze. So in this video, we'll talk a little bit about the reasons why it happens, some of the factors behind it, and we'll also talk about how this instance happens to be a little bit unconventional and almost a little similar to the 1999 market right before it crashed. Nick here from Ways of Wealth. Thank you for tuning in. It's another market recap. If this is your first time here, we highlight key events that are happening in the market over the past week. And before we get into the video, I'd like to ask you a huge favor. If you learn something new or you get some value out of the video, do me a favor, hit the thumbs up button. It definitely helps my channel out. And if you've been back, you've seen me a few times, or this is actually your first time here, consider hitting that subscribe button. It definitely lets me know that I'm putting out some valuable content for you. And I appreciate all your support for those of you that already subscribe. To get the best understanding of what a short squeeze is, let's break it down hand in hand with the company GameStop. And the best place to start is an overall understanding of what business they're in and kind of their models. Not to get too far into it, but obviously GameStop is a video game and console seller, but they primarily sell through brick and mortar outlets. Now, that's a part of the economy that's been absolutely hit right now. A lot of REITs, a lot of other companies are still trying to bounce back, kind of fearing that e-commerce is going to take over that certain segment. What some investors may do is when they see a particular industry or a particular company that's dead in the water, it's not going to exist in 5 or 10 years, what they'll do is they'll take a short position on the company. So instead of buying the company's shares so that they grow in the long term, what a short position is actually the opposite. So you will make money if you short a company if the price declines. Now they're taking a look at this company and they're seeing, brick and mortar. That's obviously not going well for the economy right now. E-commerce is absolutely killing it. They're doing so well. And when you look at the e-commerce platform that's being offered by GameStop, it just isn't there. So that's why all these investors, and there was kind of a immense pressure of short positions on this company, and it had amassed to about 144%. To the percentage, I don't understand, but what I do understand is that there was so many people placing bets against this company. Now, where this starts to get interesting is that this stock happens to be loved by WallStreetBets. It's a subreddit comprised of a bunch of day traders, and they look to pump and dump stocks. Now, obviously, the rise of the retail investor has kind of been the ignition ever since March, which kind of drove the markets up. We've talked about it in previous videos, how, we've seen Robinhood enter the market. These low commission brokers have caused this younger retail investor to kind of swoon in and take advantage of a generational buying opportunity that we saw back in March. And we'll talk a little bit about the buildup as to why they use this forum, this platform, in order to pump this stock right up. And it all kind of starts with Ryan Cohen, who's kind of a advocate of the company. He does own some shares, but probably most notably known for being the founder of Chewy. That is also a public company in the pet space. Now, what he did is he proposed back in November that they should have a better e-commerce. He went to GameStop and said, listen, the whole world is moving onto this e-commerce platform. You really need to step up your game. So all of a sudden, in the beginning of January, we got news that Ryan Cohen was being added to the board of directors to kind of give some insight as to what he's done with Chewy, and investors started gobbling this up. From there, we saw, a 13% move in the first day that it was announced. And it slowly started to build up until it hit the pinnacle event. And that was Andrew Leff from Citron Research came out and said that he had a short position and he was going to list 5 reasons as to why the stock was going to come back down to 20, and WallStreetBets took offense. They created this forum. They said that they're going to send the stock to the moon. They bought shares, they bought call options, and what happened on Friday was absolutely incredible. Now this is where the short squeeze comes into effect. Okay, so let's forget the short for a while. Let's talk about you buy a company, you're expecting it to go up. Well, your maximum risk when you buy a company's shares is that those shares will go to zero, okay? Now, let's take a look at a short. So if you buy a short position in a company, your maximum liability is essentially infinity. So if you buy a short position at 50 and that company goes to 1,000, well, you're liable for the 950 that it's increased per share. So what happens when GameStop happens to continually do better and better and better? Well, those 144% of stocks that are shorted, people want to, eliminate that risk. And the way that they eliminate that risk is by buying the shares back, and they buy it for the shares in the market. And obviously when you're buying shares in the market, that is leading into why the share price is going higher and higher and higher. Because there was so much short interest, and because the company had positive news, and because WallStreetBets was pumping it, it caused this company to roar on Friday all the way up 70% in one day. The New York Stock Exchange had to halt this stock, okay? By the time the day was settled, by the time the day was done, it had gained alone in one day almost 50%. Now, 50% in one day, but also year to date, this company is up almost 250%. It's an absolute phenomenon. What is going on right now with the company GameStop? Taking a look into WallStreetBets, I happened to find somebody who put a call option for $785,000. They walked away in one day with $5 million. That just gives you a mindset of what is going on in this group. They call it YOLO, you only live once. It's definitely very interesting times. And that's where it kind of reminds me of 1999. Now, not me in particular, but when I was doing some research about this, there was a heavy retail presence in 1999. And if you're not familiar, AOL was kind of a chat, web browser, all of the above, and they had actually created some type of similar forum and chat, and they would use it to pump stocks. Now, that's kind of eerily reminiscent of what WallStreetBets is all about. So it very much brings me caution. I'm very cautious as to where we're at in the market. Are we kind of at that top euphoria? So it's something that, I'm taking with a grain of salt. I'm trying to figure out where we're at. And hopefully the retail investor is more powerful than it was before, but hopefully the rug doesn't get pulled out anytime soon. Some data that I read on this is that the short positions are actually moving back into the name, and I believe there was almost 800,000 shares that were shorted on Friday alone. So this could either lead to two things. It could be the bears, the people that expect this company to go down, the short positions, these people, they could end up winning, as I believe GameStop is trading at 50 times earnings, which is unrealistic. If you look at this company's balance sheet, it's declining net sales, it's declining revenue. The overall business does not look good at all. Or it could cause a further short squeeze if the bulls win, if these WallStreetBet guys continue to pump this stock, which I have seen over the weekend. Nobody's selling. They're going to continue to buy the stock directly. If they can continue to cause this short squeeze to go, who knows where this stock will end up. Obviously, you don't want to be left holding the bag. I'm definitely not suggesting to go out there and buy it. It just happens to be a great example of when so many people are betting against the stock and some positive news happens to come out there, it could cause all of these people to cover their shorts, and which causes buying pressure, which causes the stock to absolutely explode. And with the GameStop example happening this week, I thought it would be the perfect opportunity to kind of show you an example of why and how this happens. It's definitely something interesting to watch in this upcoming week about what happens to the company. I hope they're able to figure out their e-commerce solution. Like I mentioned before, I will not be investing any money. I'm not interested in playing any games. There's some people that are a little bit more risky with their money that might decide to. I would not suggest it. This is definitely not investing. This is moving into the gambling category. But yeah, no, it's definitely an interesting topic, something cool that's happening in the market with the rise of the retail investor. Now, as I mentioned before, is this kind of signaling a market top? I hope not. I hope we're moving into the roaring 20s, kind of something similar that we saw back in the 1920s. So I hope that that happens again. But with all of this retail action now, we're actually, controlling the market, where before that was institutional investors, that was hedge funds, pension funds, those people with the massive amount of money were controlling. But now it seems that the power is in the hands of the retail investor. All right, that wraps it up for this week. Again, if you've learned something new, if you get some value out of the video, it lets me know that you're enjoying the content, telling me that I did a good job by smashing that like button. I would definitely appreciate that. And if you made it this far, hit that subscribe button, turn that notification bell on. We do this every single Sunday. I hope you all have a great week on the markets. Happy trading.